Okay, so welcome to session 2 of the summer school. Our next speaker, Ian Coleman, is here, so we're just bringing him up onto the screen. Apologies to that first session with Martin, a few hiccups there, and I'm sure Ian is suitably sweaty, having watched that. But Ian, I'm going to help you as much as I can to make sure that we have a smooth transition here. So I know that you've accepted and connecting the screen share now, which is great. So any moment now. There we are. Good morning.
Morning, Simon. How are you?
I'm fine. I'm fine, and thank you for joining us.
You're welcome.
I think we'll be the. I think we'll get. We'll try and just go straight over and try and get this screen share cracked as we're talking. So. Okay.
Let's have a look.
Above your webcam screen, where you see yourself on the screen, you just have a screen with an arrow coming out the top of it.
Yeah.
If you can press that, it just takes a couple of seconds, and that should start to build your screen. I can see it happening already. That's great. So what I'll do is stop sharing my screen, and we are now looking at, I believe it is your platform. You've got about 6 charts.
Great. Yeah, it's a TradingView platform.
Fantastic. Great. TradingView, it just seems to go from strength to strength. They're taking over the world, I think. It's the number one website. These great things by Piers Crosby on LinkedIn. Just the stats, the amount of downloads and users they have, it's quite incredible, the growth trajectory of trading.
Yeah, it's. I mean, for me, it's a great platform, and it offers quite a lot of analytical tools that nobody else does, basically. So, I mean, that's the reason that I use it, and some of them are pretty unique, which is probably what I'm going to talk about today, which is this single currency baskets.
Great. Well, good to have you here. I mean, by way of background, you know, just very briefly, I know you've got a background in the city.
Yeah.
You've built and sold businesses and trading rooms and things.
You're making me sound quite old. Yeah, I mean, I started in the money markets when I was 18. I was a Swiss franc junior back in the day in a company called Godson Ashley and Pierce, which was down on Cannon Street, and then ended up moving to a company called Pribonimani. Worked there for quite some time, still doing Swiss. Then did a bit of yen. Then went to a company called RP Martins and set up a Swiss desk there, and actually was one of the youngest managers in the UK. I was only 26 at the time. But then lifestyle got a bit too much, to be perfectly honest. I had a wife and a small child, and basically just walked away. But FX has always been my passion. I walked away and came back to Sheffield, where I lived as a youngster. And I now live here with my wife and 2 boys. But FX has always been my passion. There was a very small period in my life where I wasn't involved. I actually had a delicatessen and coffee shop at that point, and I sold that and then got back into it, basically. You know,
I didn't have catering in the profile there.
That was actually it was supposed to be easier work than foreign exchange, but it didn't work out that way. So I did the weekend work was a bit too much, so I decided to give that up. So yeah, and then I got involved with a company called PIA First, which is now Signal Centre. Worked with 2 great guys, Steve O'Hare and Joseph Neighbour. Who you know quite well, and that's
before, which is great. Yeah,
yeah. Nice. The company Signal Centre has actually recently been merged with another company called Acuity Trading. So it was all very amicable. I've walked away from that merged business just to concentrate on my trading, basically, and that's where we are at the moment. So I am actually a freelance, answering to nobody. guy at the moment.
The best way to be. The best way to be. We're very grateful for you coming on and joining us in the middle of summer. I know everybody's got lots of things to do, but I just asked if you would come, and not only did you agree, but you realised I'd set you up with a different topic title.
Yeah.
To analyse the market quickly. It wasn't the chosen subject. We were going to talk about single currency trading. But you kindly agreed to sort of adapt the presentation that you had. So I'll hand over to you. It all seems to be working, fingers crossed, at the moment. Everybody can hear and see. If anybody's got any problems, can you just let us know? I think Sharon is saying she can hear already, which is great. So I think all systems are go. So, I'll hand over to you and look forward to taking some questions, maybe a little bit later.
Super. Thanks, Simon. We might even be able to get a bit of live trading in here because we've sort of a currency pair that we've been concentrating on this morning has been euro sterling. Basically, what I've done since I've been away from sort of Signal Centre and trading on my own is I'm still posting videos. I've got a YouTube channel. They go out on FX Street, and what basically happened was a lot of the guys that were watching the videos were saying, I'm unable to ask you questions. A lot of the trades that you're sort of posting that you're in, I'm getting in late, or I'm not seeing why that's happening. So basically what I did, or what I've done, is I've taken up a Telegram group. There's a channel there where I post basically all my thoughts going out throughout the day. Actually start about 6:30 in the morning, and then we've got a small chat group where we talk about basically the setups and what's happening. I'll put that slide or put the invitations into the chat later on. It's completely free. I know they say the best things in life aren't free, but this one is. And if you want to join and just see how you go, that's super. So basically, I'm always looking at different ways to analyze the market. I've looked at Cypher Patterns, Elliott Wave, Ishimoku Cloud, price action. I've probably read over 100 books on psychology and technical trading. I'm trained I've got the M.S.T.A diploma, etc., etc., etc. Saying all of that, I take probably 100% knowledge in, and I probably throw between 90 and 95% of that knowledge out, because a lot of it just doesn't work, or a lot of it is lagging the market, i.e. the price has already moved by the time you get in. But what I've been able to do is I've been able to combine basically 25 years worth of knowledge into a system that now produces pretty good levels and also obviously trade ideas and decent P&L. I was actually highlighted to single currency charts by my ex-colleague Joe Neighbour, who's still quite a good friend of mine, and he basically found it from somebody else. Somebody highlighted it to him, so we're sort of passing on the information, if you like, or passing on the knowledge. So single currency charts basically is a combination of all the separate currencies against one dominating currency. It's like the DXY, which is the dollar basket, but it's not the same, because the dollar basket is weighted. These are actually unweighted baskets. So I think the best thing I can do to start with is actually show you how you can actually set up a currency basket. So basically I've got 8 here. I've actually got 9 because I've got 2 yen pairs, but I've got the dollar, I've got the euro, I've got sterling, I've got Swiss, got Canadian dollar, I've got Aussie dollar, New Zealand dollar, Japanese yen, and I've got Japanese yen twice. But you'll notice this bottom chart doesn't have any numbers on it. This is actually a yen basket which has been produced by TradingView. There are baskets within TradingView that you can use now, but are we still watching the screen? Yeah, but I don't believe that they are as accurate as these. So basically, to make a currency basket, what you need to do, say if it's the dollar, you need to do euro dollar the dollar against the euro, and then it's the star above your 8, and that basically, that star is a comparison sign on TradingView. So then you want to do dollar against sterling. So you'll notice here that the dollar is at the start of all of the pairs. So again, star, and then dollar, Swiss, etc., etc., etc. So what happens is you get 7 of these, because there's 8 single currencies. So you get 7 of these. You press enter, and hey presto, you get this. So this is, and let's just open one up that's not annotated. So let's get 8 on there, and we'll just go to here, and we'll go to, and for some strange reason, some of my charts has taken a while to, I think there's that many annotations on them that they're taking a while to fill up. So basically, this is the dollar. Now, if you go to, or if we go to the dollar index, you'll actually notice that it moves in similar ways. So this is the hourly chart on the dollar index, but it's not an exact mirror, okay, because you don't have that weighted product. I'm just reading the chat to see if there's any questions. So it's slightly different, okay, and of course we've got the euro, sterling, and you'll notice on the right hand side here, obviously these aren't currency exchanges. It's not 1.17595 as it is on euro against the US dollar, because it is basically combining and timesing all of those different euro products or sterling products, etc., etc. So you can see down this side here that all the different numbers, and one actually got pretty close to 0 at one point, and I did wonder how it was going to play out if it got down towards those levels. But what we can do, and let's get rid of that again, is we can analyze these single currencies the same as we can analyze any other product, say sterling dollar, euro dollar, oil, gold, etc., etc., BP, whatever you're looking at. So what we can do, we can overlay chart patterns, and basically here, what I have in all my setups, this is the monthly chart, this is the weekly chart, this is the daily chart, this is the 8-hour chart, 4-hour, and then hourly. Don't ask me why I do it that way. Maybe a little bit cock-handed, but I do. So every morning, basically what I am looking for is not correlation. I'm looking for a currency pair that's going to, or single currencies that are going to move in opposite directions to each other. And that is the niche part, if you like, of this analysis. Now, we get so many, or I see so many, I wouldn't say novice traders, but people get stuck into a trade, or they get stuck into an analytical view. So they'll look at euro dollar, and that, especially this is true for newbies, they'll look at euro dollar and they'll say, right, the mate down the pub, what do you trade? They don't say I trade currencies. They'll say I trade euro dollar and dollar yen. Okay, that's fine, but you are massively making your scope, if you like, for trade ideas. You're taking a ball like that and you're turning it into a ball like that, because your scope for these other currency crosses is diminishing massively. You've got 29 different products that you can choose from on a daily basis. Why would you just want to concentrate on 2? And that is something that I've been a great fan of for quite some time. Do not get yourself linked in to just one currency pair, or you'll see sterling dollar and it's gone to the downside and you've got 261.8% extension. You think it's going to correct higher, and that's the only currency pair that you concentrate on that day. And a lot of guys and traders will look at products like Euro New Zealand and they'll say, well, I'm not trading Euro New Zealand because it's 7 ticks wide. But there's a reason for that. Yes, there is lower liquidity, and that's one of the reasons it's 7 ticks wide. But the other reason is because it moves a lot quicker. You shouldn't be looking at currency pairs on a pip basis. Pips are irrelevant as far as I'm concerned. Spreads are relevant, but pips are irrelevant. The relevant factor on every currency pair is the percentage move, and it's all to do with your R, and that's another webinar completely aside. Maybe we'll talk about that later, but it's all about your risk. As long as your R, which is your risk, is near to 3 to 4 to 1 against your reward, then that's all that should matter, and your risk allocation should be denominated by that, basically. So say if you've got £1,000 in an account, your risk should be 50 bucks if you're doing X amount, etc., etc., etc. So we don't necessarily concentrate on this, and guys and girls that are in the chat room know that on a daily basis, you know, especially people that come into the chat room will sort of say, what's your view on euro dollar? And I will normally say, I haven't got one. Because that's not where our concentration is today. Our concentration is on this currency pair, etc., etc. So, bit of waffling there. Back onto the single currency chart. So, basically, this is the dollar. So this is some the analysis that we used before to try and pick tops and bottoms. Yes, we are trying to pick tops and bottoms. I know we should be trend following, but we also want to be aware of when the trend is over. So this is the weekly chart. So when we got down to this area, this is a confluence area. Cypher patterns is or are the main structure of my analysis. It's not just Cypher patterns. I will look at 261.8% extension levels. I will look at Elliott wave, etc. But I find that Cypher patterns, more often than not, you can analyze where you are in a cycle, and that is extremely important. As our last speaker said, it's very, very important to look at your monthly chart, your weekly chart, your daily chart, your 8-hour chart, to know whereabouts you are. What we can do with Cypher patterns, the monthly chart might say we're bullish, the 4-hour chart might say we're bearish, but as long as we know that in the background we're bullish, then we know that this is counter trend move, and it may be the BC leg of a formation. So this is quite a basic. Yeah, I like basic, but it does the job. Okay, it shows us the different Cypher patterns, and there's a fantastic book out there that's called Trade What You See, and this that was the book that got me into Cypher analysis, because I've always been fanatical about fib levels, and this was a completely different way of looking at fib. I think if you focus yourself just on Elliott wave, then the mistake you're going to make is that as soon as you get to a 161.8% extension level, you think you're going to drop down in wave 5. Normally, from my experience, a 161.8% extension level, if you look here, is just the end of a crab formation, and you're actually just going to collapse to the downside. So I much prefer Cypher analysis than I do Elliott wave theory. By the way, I've spent months, days, years, weekends, late nights, sat in front of a screen. I'm very lucky that I'm still married, I believe, and I have a very understanding wife from the amount of time that I've spent looking for what I believe is my sort of holy grail. So basically, so we've got the dollar index. So we're looking for a bias. So that was the monthly chart that's highlighted at the bottom. This is then the daily chart. Now these dotted lines, these are bespoke support and resistance levels. So these are intraday support and resistance levels, and these are from a system that I developed. And basically what I'm looking to do is I'm looking to overlay a bias to get a single currency pair. I'm probably not getting myself over straight, so I'm going to jump forward a little bit here. So basically bullish on the dollar, but then yesterday, as we were talking in the room, or was it the day before? I'm not quite sure now. Yesterday, these were our bespoke resistance levels. So we rallied up quite aggressively. We saw stocks coming to the downside because obviously the dollar is a risk asset. What normally happens when you look at these single currency charts is if you get the dollar moving higher, you get the Swiss moving higher, you get the yen moving higher, that probably means that we're going to get a sell-off in indices, or we are getting a sell-off in indices. If those risk assets move the other way, then it normally means an indice rally. And basically what's happened here is we've hit this barrier here. We've got a 361.8% fib, okay, and we've moved to the downside. So that's basically meant that euro dollar, sterling dollar has moved higher. Obviously dollar Swiss has moved lower. So this has given us part of our correlation. I did a piece for the Society of Technical Analysts that called Correlation and Confluence Gives Me Confidence, and this is basically based around this idea. If I want to be selling sterling, I want different products to tell me to sell sterling, i.e. I want sterling dollar to highlight that it should go lower. I want euro sterling to highlight it should go higher. I want sterling yen to highlight it should go lower. So I'm using correlation. I'm not focused on one single currency pair. I'm focused on one single currency against another single currency. So we had a bearish bias on the dollar. Now I'm just going to flick to this, which is the Canadian chart, and here we had a bias to buy Canada. So basically what happens there, we've got one product that's telling us to sell, and we've got one product that's telling us to buy. So in this scenario, we should be selling the dollar, and we should be buying euro. We should be selling the dollar, and we should be buying CAD. And if we go to this chart here, this was the trade that we looked at in the room. This is an 8-hour chart. Okay, so we're then using our single currency baskets to highlight our potential trade setup. And by the way, the dotted lines again are our bespoke resistance. So between 161.8% and 127.2% forms a butterfly formation. We spiked into there. This was our resistance level. This was this little red box. This highlighted the sell zone, if you like, and this was the target level here, the dotted line. Now you might think that that's pretty accurate, or that I've just made that up, but if you want to join the group, which I said is free, you can look back through the channel and you can look at the analysis that we did on this setup, or you can go to YouTube and have a look at the video that was posted a few days ago. I'm sure we did one for dollar CAD. So that's what we look at. So we're basically looking for single currencies that are highlighted to go in separate directions, i.e. we want one bullish, one bearish, and then we overlay that onto a currency chart to see if we can get a decent trade with decent R, and that is the basis of this analysis. So basically what happens on a daily basis in the chat room is I come in the morning and I say the dollar, I'm not going to say it's in no man's land, it's actually getting quite close to a nice level here. So this was the double top. Well, it wasn't quite a double top formation, but we hit this level twice, which is our first resistance level. We've then seen this impulsive move to the downside. Now we've got a support level down here around about 150.06 is 261.8%, and we've also got our bespoke support. So at the moment we're in no man's land. Okay, we've got a mild bearish bias, but what we want to do, we want to wait until the dollar hits this support. When the dollar hits that support, if the dollar hits that support, then we want to look for another single currency that hits resistance at the same time. We don't want it lagging. If we get lagging indicators, it's no good. Unless this hits 261.8% and our support level and then hangs around it, just trades sideways, then those other currencies have got time to reach their what will be resistance levels, to then give us this flip side, this bias on the currencies. So at the moment, this is sort of no man's land as far as I'm concerned. The euro, now this was a support level, and this is a support level. Now, we don't just use them as support levels, we want to know the big picture. So the big picture analysis for the euro, after completing this Cypher pattern, is still to the upside. Yes, we've sort of taken out a high, but this is still quite bullish as far as I'm concerned. If we go to this chart here, which is the 4-hour chart, we came down to the 50% pullback level. We've had a reaction, but then we've had another reaction at the lower bespoke support level. Okay, so this is close to 61.8%. I know it's ECB day. This is a high risk setup with it being ECB day. We've also had one of the Bank of England speakers out this morning, Broadbent, who offered the other side. So basically bullish euro. Let's have a look at sterling. And we're bearish on sterling. Okay, these are resistance levels. So basically what's happened is, as that sterling single currency basket's been moving up, and as that euro single currency basket has been moving down, what's happened in euro sterling is that we've moved to the downside quite clearly, because we've got that correlation. Okay, lower euro, bullish sterling, so we've started to move to the upside. But we don't expect that to continue forever, especially when we go back to the sterling chart. Let's have a look at the sterling chart. So this is just one time frame. This is 4 hours. Okay, so is this pullback just a pullback? Now, the fact it's stalled close to 161.8% makes me start to think that it's potentially not a complete pull to the downside, because this could potentially happen. Okay, but it has offered me a downward bias in sterling. Now, if we go to this chart here, this is a bigger picture in sterling. Okay, so we've moved lower. There's a Cypher pattern all the way down here. So do I want to be buying sterling? No. The big picture tells me I want to be selling sterling, and the big picture in the euro, going back to this chart here, tells me I want to be buying sterling, and that gives me the correlation trade of buying euro against sterling. And if we look again to big picture analysis, okay, this is the daily chart, and this is probably, I've just noticed somebody saying that this seems like a lot of natter but no action. It's not for everybody. It is quite complex. But it makes me money. So it's one way of analysing the market that nobody else does. You do need to know Cypher patterns. You do need to know price action. You do need to know potentially Elliott wave. You do need to know how to set up a single currency chart. But for us and as a group, we've had 3 or 4 winners in a row now. So we took dollar CAD, we took euro CAD, and we took euro New Zealand. They were all it seems like hindsight. Well, that's why you need to have a look in the chat. Let's just go to the chat actually, and then we'll see how much hindsight's actually in there. This is our chat group. And I'm not arguing with you, by the way. I'm just trying to make you aware of what we're doing. So this is today's analysis. This is all on euro sterling. Let's have a look. Time frames. Let's get to where we took the euro New Zealand short yesterday. So this was basically talking yesterday about euro CAD. We'd been short and we'd hit a support level. So please, if you do think it's hindsight or it's waffle, join the group. You can soon leave. It's the code is here. I'm just going to drop this into the chat so that anyone can come and have a look and see if we are talking waffle or we are hindsight traders, etc., 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 etc. I'm not sort of defending myself. I just I don't think you should really put somebody down unless you come and have a look properly. So basically, we're looking at correlation. We're looking at price action. There are other analytical tools that are thrown on top of this. Like I said, these dotted lines here are my bespoke support and resistance levels. I don't divulge them. I divulge what they're doing, but it's taken me, as I said before, probably 25 years to develop this system. So I give out some of it. I don't give out all of it. I don't charge for it, but I don't think that I think anybody that's got a USP or something that's quite unique in the market just doesn't give it away willy-nilly, if you like. I'm generous, but I'm not that generous. So I've been thrown off track here because I don't have a script. I've never scripted any of the analysis. So let's go back to Euro Sterling. Let's break this into this time frame. So basically, what I was looking at on a medium-term basis, and what we tried to catch, and we did actually catch a trade from here as well. And I do believe we've got Kimberly Olsen in the chat, and Kimberly's been with me since the start. So Kimberly will be able to tell you whether or not I'm making these trades up or if it's all hindsight. This is Euro Sterling on a daily basis. So what I'm basically looking for when I do the short-term trade setups, I'm also looking for long-term targets or potential long-term targets. I want to be leaving some meat on the table, if you like. So here is Euro Sterling daily chart. So an 88.6% pullback is quite common for these Cypher patterns. So if we go back to the Cypher pattern, I'll just get this back up. If you notice here, the XA leg, then the AB leg, and the BC leg can either go between 38.2 and 88.6. Now, if you look to all of these Cypher patterns, and this is why I like catching the BC leg, is that they all say 38.2 or 88.6. Okay, so if you can get an 88.6 pullback level, and you can get a target level up here, and this is just, I've digressed a fair bit, but never mind. Your risk against reward can be colossal. So if you were to catch that trade down here on the bottom of this BC leg at 88.6% of this leg, and this is your target, that is, by the way, a perfect Cypher pattern. It's an inside Cypher pattern. It's known as a bat formation. Bat formation is 261.8% of this leg and 88.6% pullback of this leg. I know for a fact, because I've traded them for so long, that the markets move around these Cypher patterns. So you can be a non-believer if you like, but I would say give yourself an upper hand, do some studying on Cypher patterns, because if you don't, it's probably something that you're going to analyze in a few years' time and think, why the hell didn't I get involved in that? That should have been a part of my plan. So basically, if you catch this trade down here and you're looking for this confluence area up here, that's a 13R risk reward. So for every £10 that you risk, you've got the potential to get 130 back. Now that means that you could potentially have another 12 trades that lose and still break even. So that is why I looked at harmonics, because they can offer extremely good risk reward. So basically what I'm doing in this Euro Sterling bias, so here's again just going back to this analysis, we've hit the Euro support and we've hit the sterling resistance, so I want to be bullish on euro sterling. When I'm going into this, I'm also analysing this pair, so it's not just a case as Analyst probably believes of sort of waffling and making things up. It's a case of trying to get a bias on a single currency pair and then analysing that single currency pair. Just because I've got a bias on it, I'm waiting for price action. I'm waiting to analyse the market. I'm taking time frames, as the last speaker talked about. I know, or I believe, that I'm in a bullish time frame. So I believe that I have the potential, as far as the weekly chart or the daily chart is concerned, to have a massive rally to the upside over the medium term. So that doesn't mean that I won't take sell trades in euro sterling, but I need to know that it's counter trend. Now this, if I get a buy trade in here, this is, as far as I'm concerned, is trading with the trend. So I've analysed this market, euro sterling. I've analysed my monthly chart. This was an hourly chart where we had our little our little blue buy zone down here. Okay, we then went up in 5 waves, which is Elliott wave theory, and now we're coming lower, and I can see that this move to the downside. Okay, 261.8% here at 85.80. I've got bespoke support here at 85.77, which we talked about in the room. We've had a reaction to the upside. It's probably not going to be a complete trend continuation, because when I'm looking at this, I'm thinking, well, this is wave 1 in the big picture, this is wave 2, and this is probably an ABC to complete wave 2. So I know which part of the wave cycle I'm in, but I'm using my single currency baskets to get me into that that cycle. So let's explain what happened on dollar CAD when we took this trade. So, and it has to be hindsight. I mean, well, it's not hindsight. I'm giving you what I'm in at the moment. I'm looking at euro sterling. Hindsight was going back to these trades that we had as setups. So this is the dollar. As we said, we were bearish on the dollar, so we hit this 361.8% extension level. We had this sell zone to the upside, and we had the bias to buy Canadian dollar. So going back onto dollar CAD, we had this dollar CAD Cypher pattern. Okay, did we just sell it at the top? No. Again, have a look in the room. Don't just go to the channel either. You need to go to the chat, because in the chat we're talking about very precise entry levels, and this is where my bespoke support and resistance comes in. So what happens is, you normally don't get just a very quick trend reversal. Sometimes you do on news and it will break through all support levels, but what has a tendency to happen is you'll move up to a relevant level. What will happen then is you'll get a correction to the downside, but it'll hit a time frame support. Now that might be the 4-hour time frame, 2-hour time frame, 1-hour time frame, but it hit a time frame support, and this is where my bespoke support and resistance levels comes in, that I won't be looking at divulging anytime soon, but that we then expect to bounce from those levels. We then get what gives us a reversal formation, and then we get quite precise resistance levels. And I think, if I remember rightly, and I'll have to look at my P&L, but I think 127.58 I think was our retest level on dollar CAD, and we actually drill some of these charts down all the way into 1 minute, and we had a 50, I think it was 56.58, so it was a 2 pip level. And what happened was, we came up, we hit 56, it consolidated for a while, then it hit 58, and that was the top of the market. And then we took out the support levels, and it moved to the downside. Euro New Zealand was a trade that we looked at. So we were playing the euro off this resistance level, and we were playing New Zealand off this support level, and that, again, that gave us a Euro New Zealand bearish bias. And we looked at the big picture analysis. Again, this is going back to sort of what I would now call pretty basic analysis. We're looking for this BC leg to the downside, and this is a monthly chart. Okay, we're not trading off a monthly chart, but we know that there's potential to move lower. If we go to this chart here, okay, and this dotted line was our bespoke resistance. Again, we know that we've got potential to move lower because the BC leg in a AB BC correction to the downside will normally end up between 78.6% and 88.6%. So if we can clip here, and again, it's all back to risk against reward. Where are you? Short position. You know, we can get some big R, and that's what we're looking for. We're not expecting, well, we've had a very good run at the moment, and we don't normally get as many winning trades in a row as we have had. But when we get target levels like this, when we get 9 Rs and 12 Rs, because we're looking at a break of formation, in other words, if it moves over the high, then we're out the trade. You know, we know that we've got potential to get decent R, and that's what trading is about. It's about decent R. I think I'm probably going to stall there and just ask whether or not anybody's got any questions. You went long on Euro Sterling. What price and where? No, I'm not. Again, have a look at the chat, Anil. I am not. I'm very wary about FCA regulation. So if you're going to be a money manager, or if you're going to be a signal provider, then under FCA regs, and I was under FCA regs for quite some time, you know, you need to be licensed, and I don't care what anybody says about being non-licensed. The FCA can pull you up if you're telling people what to do. Okay, what the FCA are quite okay about is telling people what you are doing. So in the Telegram chat, in the chat room, and in the channel, I'm telling people what I am doing. I'm telling them where I'm entering a trade. I'm telling them where I'm exiting a trade. I'm telling them where I'm taking a stop. So I'm not giving trading advice. I'm actually giving a diary. This is a blog as far as I'm concerned, and it's just a blog where you can ask questions, which a lot of people definitely do. Can you look at sterling dollar and sterling yen chart? We'll make our own decision. Again, this is not how the sort of system works. Okay, let's have a look at this. So sterling, I'm a seller of sterling. What am I in the dollar? Well, I'm not anything yet, because I'm not a buyer of the dollar until here. But so that basically using the correlation, okay, I should be selling sterling and I should be buying dollars, but I shouldn't be doing it at market. I should be waiting until the dollar reaches this support level. So that in mind, I should be selling rallies in sterling dollar, but I don't have a setup here at the moment, and that's why I said before that I'm not a signal provider. I do look at 29 different products, but I pick the best 29 different products. You don't need to be concentrated on sterling dollar and sterling yen unless you're in them. But I know for a fact that I've got some bespoke resistance up here. I think it's around about 137.90. Okay, so although this is 261.8%, I think the stalling there is the stalling in sterling. It's not the stalling in dollars. We're still going to see dollar weakness. Now, if we see dollar weakness, we should still see sterling move to the upside. So there's a very good possibility we're going to get to 137.92. If we get to that level, and if sterling still shows as a sell off that resistance level and the dollar is now at support, then yes, I will be looking at selling sterling dollar. And I don't think that this, even though we've stalled there, I don't think that 261.8% is relevant, because as I said, a lot of the time with Elliott wave, they get blown out of the water. What I do believe is that this will become a part of the formation. Okay, so this might become a basing pattern. Let's just get to where I was. So this might end up looking something like that. So it's forward, it is forward analysis. Okay, we're looking for correlation, we're looking for confluence, we're not looking for mid-trend trades, and that's all this potentially is at the moment. Sterling yen, let's go back to the yen basket. Okay, the yen basket is nearing support. Okay, so we've got potential here. We've got potential for sterling yen to roll over, but at the moment it is still bullish. And you can see when the last time I looked at sterling yen, because I haven't had that correlation between those two pairs. If we go to here, and again, I think it's got more upside potential, and that's because of the yen side, not the sterling side. So again, we've stalled at a fib level, but just because we stalled at a fib level doesn't mean we're going to turn over. Yen looks like it's got more to go, so yen could quite easily stall between this level. And why I'm saying between this level is because that will actually form a Cypher pattern, not a very pretty one, but 88.6% and 261.8% is a bat formation. So if we get up there, if we've got some bespoke resistance, if yen hits at where we expect it to hit, and the sterling hasn't moved, then this zone is looking quite good for a potential setup. But at the moment, I'm in no man's land because yen can move to the downside. It might stall. You might see some choppy price action because we're in that sterling stalling mode, if you like. So the driving, you get basically what this has helped me to do is help me to understand what is the driving force on any single move. So basically, if you're looking at euro against the US dollar, I'm just taking that as a prime example, and it moves aggressively to the downside, do you know whether or not it's euro weakness or dollar strength? Probably not. Well, I do, because I've got single currency charts that tells me which one's moving and which one's not. Okay, and then I can look at euro sterling, I can look at euro yen, I can look at euro Swiss, I can look at euro New Zealand, etc., etc. I mean, what I used to do, and I don't know if I've actually got it on here. Let's have a quick look. I don't mind disclosing these. I had a spreadsheet which had every single currency pair on it. And so if I find it and people are in the chat, I don't mind dropping it in the Telegram chat. And basically what it was a correlation spreadsheet that I developed. So basically you'd have euro dollar bullish, sterling dollar bullish. So, but it would actually split it into two single currencies. And then it would, in highlighted columns, I would have the dollar, the euro, Swiss, and it would basically tell me where I should be, or how bullish or bearish that single currency should be. And basically what normally happens is, as you get turned over, or as euro dollar hits a level, sterling dollar hits a level, dollar Swiss hits a level, dollar yen hits a level, dollar CAD hits a level, that tells me that it's the dollar move. Okay, because they've all completed possibly Cypher patterns, possibly 261.8% extension levels, and we might have non-farm payroll, we might have another big US figure release. So it tells me that the moving factor on those pairs is the dollar. Now, if I've got a concentrated effort or concentrated mind, if you like, on euro and sterling this morning, then I could look elsewhere. I could also look at the euro against US dollar. Do I think that's got a potential to move to the upside? Euro Swiss, has it got potential to move to the upside? But I found before that even though this sounds complicated, that muddies the water, because what will happen is you will have so many currencies in the euro basket, if you like, which are bullish, but there'll be a couple that are bearish, which will basically knock the analysis sidewards, and then you could potentially miss a decent trade setup. You seem to be a swing position trader. Yes, definitely. We're looking for decent moves, but what we also have the ability to do, which happens sometimes, and it happens not all the time, but sometimes, as I was saying before, with the dollar CAD trade, yes, we look for swing trades, but we also sometimes have the ability to get extremely accurate entry levels. So I believe it's more of a intraday scalping technique that offers potential swing trade rewards. So I personally believe that we get the best of both worlds. Has anybody got any other questions? The overlay that I put on these charts, and I've obviously taken them off because it wasn't really the subject today, but the overlay on these charts is DMARC indicators. And the reason that I look to DMARC indicators is that I know that a lot of institutions use DMARC. I know that a lot of hedge funds use DMARC, and I've been able to develop DMARC personally into a system that gives me quite decent areas of support and resistance. So that's a subject for definitely another day, because you'd need more than an hour to get that across. Anybody got any other questions? So just to reiterate what we're talking about, we're talking about single currencies. We're talking about using single currency charts, analyzing single currency charts, mainly using fib levels, mainly using Cypher patterns. We then look for a bearish bias against a bullish bias. We then overlay that onto what product that produces, and then we look for that to be the concentrated single product of the day. As Kimberly asked once, she said, how many currencies do you look at? Well, we look at 8 currencies. We look at 20, or I look at 28 currency pairs. At any one time, I will normally only get 2 or 3 trades on maximum, because to a certain extent I do micromanage them, or try and micromanage the entries. And I'm not in euro sterling yet, because I've been holding this webinar. So like Kimberly and I discussed in the chat room, we just hope that we didn't miss the entry level while we were discussing the analysis. Any other questions? It is very complex to take on in one session, and it's far away from the headline that we posted, that Simon and I posted. So it's probably wrong-footed a few people, but even if you don't chat, just come into the Telegram group and just have a look and see whether or not it eventually triggers. Is probably not the right word to use, but I don't think you need 3 months. Kimberly and I have been talking for, I don't know, 4 weeks, and basically Kimberly's right on it. So I don't think it will take 3 months. Okay, I think that's it. I'm going to wrap it up there.
Yeah, well, like you say, I hope we haven't kept you out from missing the take position and missed your big trade.
No, it's fine. They're like buses, aren't they? So
yeah, indeed. But listen, thank you for coming, and thanks everybody for all these good questions. It's good to get some exchange of opinion and different perspectives. But I know a few of you have probably joined Ian's Telegram group. The big button there under the screen, under the chart, will take you to Ian's Telegram group, so you can sign up there and start sort of just getting involved in some of the chat there as well. A couple more questions, Ian, before you go. Dan says, you say lows, but what time frame?
When did I say lows? I use multi-time frames. But basically, what I'm looking for when we get a trigger or we get a support level, I'm looking for reversal candle formations, but they've got to be on the low of the day. So that might be a bullish engulfing candle. It might be a morning doji star. Basically, what normally happens is if it breaks a level and posts one of those reversal formations, it will normally hold, and if it doesn't hold, then that basically means that that formation hasn't held. So we don't get too precious about a trade. If it's wrong, it's wrong. We wait for the next signal.
Fantastic. Sharon says, I like your perspective, very practical. Kimberly says, yeah, they're about 4 weeks. Fantastic.
Yeah.
Okay, well, listen, Ian, thank you so much. It's been great to have you. And so far, the technology seems to run fairly smoothly.
Good.
Thank you. So, I don't know.
Glad to hear
we just got lucky, I guess, for the second one in. Okay. I will let you go now. If we don't speak before, enjoy the rest of the summer, the holiday month, and we'll keep in touch. And good luck with growing the Telegram group. We'll keep people. We'll keep that link going out to people. Of course, there's replays on YouTube as well.
Okay, thanks, Simon.
Brilliant. Thank you so much indeed.
Enjoyed it. Take care.
Okay, so what we're going to do now is we're going to end this session. I'm going to pull everybody through into session number 3, and we are looking forward to Tarun Nagapan from Master of the Markets.